Edition of the London Session Open. Today is January 10th, 2020, and it's almost 10 a.m. in the morning, and it's NFP day today. So markets are a little bit quiet, which usually are in the morning, and then as things kick up, things start. When the NFP numbers come out, it gets quite volatile. Here, just to give you a little overview. Euro USD is pretty much unchanged, as well GBP USD. Bit of Aussie dollars up a bit. Stock markets are up a bit as well, but everything is pretty much quite quiet. Crude oil is down a tiny bit. Gold as well. So there's not too much activity, which is fully normal. So what are the markets anticipating today? Well, the latest reading, which I have here on another screen, which you can't see, is for the unemployment rate to be 167,000 new jobs created. And you can see here that in the last reading we had an outcome of 266. It's quite a big move, but that probably had to do more with sort of don't remember now, but there was a big strike, I think, if I remember correctly, and then these numbers would be added back on to the actual number. I don't remember exactly what it was, but it was supposed to be a little bit difficult to sort of assess the number. The reason why I don't remember exactly, because it actually doesn't really matter too much. What we want to look at today is really what the outcome is going to be. And again, the expected outcome is 164,000 new jobs, which effectively would push us back down to the sort of numbers we saw here and before December. So more of a moderate growth. If that actually plays true, and then it shouldn't be a big reaction in the market. But obviously, if the reading again is very high or very good, then that should sort of boost the numbers. Because if we can linger around 266,000 new jobs created, then that's obviously very high levels. This is actually data from 2015 that you can look at here right now. The other bits of piece of information you want to keep an eye on as well is the wage growth. So average hourly earnings yearly growth is anticipated to be 1.31, also 3.1, sorry. Let's see if we can find that here. There we go. Numbers here are a little bit different under our calendar. We're gonna replace this calendar with something better, hopefully in the next few weeks. But this is the chart and of the wage growth, and the last reading was 3.1%. And you can see we had a decent sort of growth in wage growth, and this is definitely a good wage growth, and higher than many other countries. And I think if we go above the anticipated, so maybe we do 3.3 or so, then that will be maybe marking the end of this downtrend in wage growth we've been seeing, because wage growth peaked here in March last year at 3.4%. So that's really what I will be looking for. And again, if the numbers are really good, which wouldn't surprise me because the ADP number was quite good, then there's a risk here really that Euro USD might actually break below support. So you have the trend defining level at 110.80. It's been like that for some time, and the actual low, which really matters, is 110.64. So that is the actual low that matters. And I'm gonna do something now. I'm gonna actually push this down a little bit like that. The reason for even increasing it, remember what happened? We had it down here, and we said look to buy here, and the market went up, okay? And then we reduced the trend defining level a tiny bit to this level here. But now we're just pushing it back. What are the different strategies you can do there? And why would you want to do that anyway? Well, because this is the key level. So if we trade below that level, then that would end the trend. So sometimes you just need to do stuff like this. So what can you do if you're already in position? Obviously, if you bought the first time around, then there's no change to do. If you bought the second time around and you suddenly need to push back your stop loss, then there's nothing wrong with reducing a bit of the position to make sure that if one does get stopped out, that the loss is contained. For example, if I have a 50 pip stop loss and I'm risking 1% on that, 1% of my account, and suddenly I need to have 100 pip stop loss, then I can effectively sort of cut half of the position and then push the stop loss lower. if I bought at entry, or if my position is at break even, right, then I will still just lose 1% if the market goes down. If I'm not a break even, then it's not gonna be perfect, but at least it's not gonna be 2%. It's gonna be something between 1% and 2%. Is something that's more manageable. So that's what I'm doing here. I'm just giving a little bit of leeway, because the problem here is that this is gonna spike. Now, technically, the trend overall remains bullish here, so there's no real reason to make any changes. The same thing with GBP versus the USD. We're not even close to the low right now, so I'm not going to make any changes to this one. Yesterday, the market slid. The reason for that is because we did have some comments yesterday by Mark Carney, and that actually effectively telling us that they might introduce some sort of stimulus, which makes perfect sense because the UK economy is struggling quite a lot. And then obviously Brexit coming up, it's not going to make things easier in the short term. So that's why the market is weakening. And not only that, we had some comments from the EU that, a deal with the UK might not be done before the end of 2020, which makes perfect sense. It takes 7 years to do something like this, and they're gonna try to do this in 1 year. So we'll see what happens. But of course, the market is worried. Here's another one, which is dollar versus the Japanese yen. Now, the dollar versus Japanese yen did actually try to break support. So it did try below 108.30. That was a good and valid signal to sell. The market then went back into the price action, or back into the range, and took out my trend defining level, which was 108.88. The market is now neutral here, and the price is actually trying to take out the prior high. If the numbers are good, this is probably going to take out the high, and we can trade upwards. But I will be a bit careful here. You can, of course, buy a breakout if you want to, and then you just put stop loss somewhere here in the middle. The alternative, which might be better, is actually to wait and trade on Monday instead. So because if the numbers are bad, this is just going to go back into the middle. If the numbers are good, the market's probably going to go up. Maybe you'll do 100 pip if it's a really good numbers, and then it'll come back a bit and then go upwards. Then we have that proper break to the high here, because you have stock markets moving upwards, and dollar yen tends to follow the stock markets. So that could be a better option. Wait for Monday and then buy the pullback. Alternatively, let it go up, spend an hour or two here, and then if it comes down, then yeah, okay, let's take a look at it. Gold prices. So this is gold prices. Of course, with tensions between US and Iran coming down, and people showing restraint, and hopefully there can be some sort of dialogue. Not sure it will be, but gold prices of course go down. But remember, gold prices were going up before that. It was not just going up because of it was not just going up because of the situation in US and Iran. So I think this is gonna go upwards. And if you take fibs on this, fib from the very low to the very high, like that, you get this, which is the 50% level. Around that level, I think it makes sense for people to get involved. But now in the very short term, this market is in a short-term downtrend. So I think it's better to wait, especially because of non-farm payrolls here. But what I'm waiting for is for this to break its downtrend. So we're creating lower and lower highs now. Obviously, if we take out the high, and then go down and then go up, I'll turn bullish, right? But I reckon it can be a bit choppy. So I might try to spike higher today, but then finally go down. And then here, maybe Wednesday next week, we'll potentially do like that. Here's crude. I made some adjustments here. So as you know, we have this channel or this trend line that's been quite helpful, and the market is really close to that level. And I didn't want to turn bullish already yesterday because it was the first day following this big steep decline. If you look at the candle from yesterday, it was quite small, and that's a sign of support. Still bearish, but sign of support. And then you have a smaller candle today, so there's not a huge appetite to sell at these levels, which makes sense. I do think though it can go down a little bit more, but the way I'm looking at this right now, so I'm straight above 56.98. I think it makes perfect sense to remain bullish and sort of target the upside. German DAX is bullish as well. It's bullish. You can get double bottom, very strong move. Might go down a bit and then go upwards. We had a successful breakout yesterday as well. You can if you want to. There's nothing wrong buying right now. Stop loss bill yesterday slow, but we know from payrolls you might get away with little pullback and then higher. And then you have the S&P 500, which also turned bullish and moved up quite a bit. And a test of the breakout point here would be good, and then potentially turn bullish from there. Let's take a look at Bitcoin. So this is Bitcoin. So you had the breakout from here at this point, very strong rally, and then things cooled off really quickly. And we're actually back now at the breakout point. There are different ways of dealing with this, but I would probably just put a stop loss just here at 7486. Alternatively, just put a break even. If one is not in the market, so what happens here? Okay, there's two tactics. One tactic is this: you went for the breakout, and then you try to reduce the stop loss. Okay, what happens a lot of the times when you get it right, the breakout just kicks in, and the breakout just goes, and you reach a target, and you get your 3 times residual ratio or so. And many times when the market comes back and tests you, it's a sign really that something is wrong. And one idea here is that one would reduce the stop loss just to protect the account and not necessarily back on just on the technicals. If it's just about the technicals, then just being bullish about 6834.584 is the key. At the same time, with that information, if one is not in the market, then I can tell you right now that this whole area here is definitely an interesting area to turn bullish and then try to do something like that. Okay, so there's two tactics here. One is keeping your drawdown in the account low. The other one, which is actually also very important, is the mental drawdown. Mental drawdown or mental stress really is if you have a nice profit like this one and you did not book on that trade and it comes down and you're now not having any profit, it's almost like losing. People feel frustrated around that, and obviously if you really lose money on it, it becomes even slightly more difficult for people. And that is why, and what happens is that if you're not balanced, it becomes a situation really where you can create more problems for yourself. But the best thing to do is the neutral, where you just sort of say, okay, I'm not going to put my stop loss at entry. I'm going to leave it down here, or I'm going to leave it, maybe put it at the 4th fib here, because we shouldn't really trade much lower than that. So maybe we'll not put it exactly on the fib, maybe leave it here like that. That will be the mathematically better option to do. But what is mathematically makes perfect sense doesn't necessarily mean that it makes perfect sense as humans, because we have emotions. Mathematics is just mathematics, right? So that's something. Now, something to bear in mind, unfortunately, for all your crypto bulls is that we have this big massive wedge, and the break here, if we would have had a break, would have suggested another 40% move to the upside, up to 11,680. But as you can see here, we failed. Doesn't mean that it can't succeed over the next few days, and you still have this inverse head and shoulders, right? Still can, that pattern is still in place. So you have two big patterns here conflicting, and so far the big pattern is winning over the short-term pattern. I think you can do, as I always do, is I just keep an eye on everything else and see if it makes sense. Well, if you look at Ethereum, well, the downtrend is pretty much in place here. If you look here at Ripple, had a very nice little breakout, but again, the market sort of is pretty much back where it started, so it's not looking that encouraging. Here is Bitcoin Cash, which is less aggressively bearish, and you would effectively, this is Litecoin. It's difficult to see what's going to happen here, but you can go through everything. And on TradingView, There's actually something called total, which is total market cap of all cryptos that they have here, and that gives you so this is worth like almost 200 billion in the crypto markets right now, and that it works like a big index just to give you an idea, where the value of cryptos is going. And as you can see here, it's pretty much, unfortunately, still in that little wedge. Okay, let's see if you guys have any questions. And we have Antonio here saying good morning. Good morning to you, sir. I hope you're doing good. And we have Stefan. Do you think the S&P is a good spot to short? Looks awfully stretched here. And then we says, Marvin says, good morning, Alex. Can you take a look at pound yen? Yeah, we can do that. Yes, I can tell you that I think the S&P 500 has been, I've been looking for a pullback for quite some time, but we haven't received that. And you know what? I misjudged something. I'm gonna see if I can find some charts. I misjudged something. I misjudged the ability, the. Let me just find some charts. I'll find it. I'm just gonna see here if I can find what I'm looking for. Sorry, I'm looking for a chart that shows the asset purchases by the Federal Reserve. Because you see what happened here is that the Federal Reserve started to push so much money into the financial system. It's because of the issues here with the repo rate that was way too high, and this is just something. So this is from Nordea Markets, which is a very big bank in Scandinavia, and so this is interesting. So this is not exactly the chart I wanted to show you. See if I can find it. But effectively, the Federal Reserve, you might remember a few months ago, said, look, we are pumping money into this system, but we're not calling it QE. And they don't think it's QE. Yeah, I think this will be it. So this is, so under the financial crisis, they did the QE. Assets, this is their recent balance sheets. So this is the Federal Reserve balance sheet has expanded, okay? So this is how much I have on the balance sheet. This is how many financial assets they're effectively buying. And you can see how it moved up on the financial crisis. They did all the QE. And then, from April here, 2015, they stopped buying. And then they did the quantitative tightening. And then the things just declined. But you can see here how the numbers declined. And then here, from September 10, I lost my charts. From September 10th, which is here, they started to buy all these asset purchases. And the Federal Reserve is calling it, they're not calling it QE, and everybody else did not necessarily call it QE. Some people said, well, it is QE. And this expanded really quickly, right? So they went from, I think, 3.7 to 4.1. That's an expansion of 10%. And this is like billions of dollars, right? This is, yeah, this is so much money here. And that has affected, and this will continue. So as far people understand, they think this is going to continue. And imagine if people would have told you, guys, we're doing QE exactly like the ECB did QE. You wouldn't be shorting stocks, right? You would just be going long. Because in the past, when they've done QE, the stock markets have bounced. So that is still in play. And people say that's going to continue until April. So I don't think it's going to be a good idea to short stock markets. And here is a chart again by Nordea Markets. You can find it on their homepage. So this is the dollar index yearly change, and this is what they call excess reserves. And what they're effectively projecting here is that the liquidity, the ample amount of liquidity here, is going to cause the dollar index to weaken further. And it's not the easiest, but this is the blue chart, and this is the percentage. It's pretty much a zero, and if you see it may go up with another 4%. So 4% is something like the Euro USD is actually quite a lot. 4% takes you up to something like 115. I haven't seen any similar research for stock markets and how that's going to affect, but most likely here is for reserve balance sheets, but most likely it will cause the stock markets to go upwards. So I don't think it's a very good idea to be shorting stocks. I think it's not going to come down sliding. It should have slid maybe if we have a war, if you think something like that, but we didn't. So that's my take on that. Let's take a look at GBP yen. Okay, so this is GBP yen, and if you look at this from a daily chart, you still have a bit of a bullish bias. You know what? It doesn't look too much different to GBP versus the USD. If I look at a daily chart, it's going to look pretty much the same. Definitely a bit of a difficult situation here. I'll give you the levels, but I don't have any strong view here because it doesn't have a very strong trend on the big picture, and it does not have a strong trend in the short term. But if you look at this, you have some highs here, so you get double bottom support like, and then you have this. So it looks to me like if we take out this high, you might see further gains to 146, 147. I think that's the easiest way to try to be bullish maybe on a bullish break, later go up, and then you let it go down and then goes up. If we take out 104.82, then 140.82, then we might go a little bit lower to 139.50 or so. But you have small support here, so people will not be very interested to actually sell. And if you want to go with the dips, then you're just looking to buy here and targeting the upside. But again, there's not too much of a trend here, so I would maybe focus on something else. Okay, guys. Thanks so much, guys. Marvin, Stefan, Maurizio, and Antonio, and everybody else here that's watching. Thank you so much for joining me. Don't forget to click on the little button. Very interested to actually sell. Like that video. And if you want to go with the dips, you guys then you just on Monday to buy here and targeting the upside. But again, there's not too much of a trend here, so I would page. Have a great day. Focus on something else. Thank you, and bye bye. Cheers. Okay, guys.